Fibonacci retracements can be an invaluable way to spot important areas of support and resistance. The retracement study is drawn from one extreme to another, this low up to this high. And these are drawn by the user, but the lines are laid out automatically by your charting program. Now, these lines, of course, don't exist before you anchor them to the high and low parts, but once you have done so, from there on, if the chart is Fibonacci friendly, that is, if it exhibits a lot of areas of support and resistance respect for these lines, then it will probably continue to be an important tool for anticipating important support and resistance levels. Here in the case of silver, it repeatedly has demonstrated an almost uncanny ability to target areas of major support, and when that support is violated, for example, as it was recently here in this example, one can know that there's significant resistance above and a long way to go, in this case beneath, until the next retracement level. Here's gold as a different example. From one extreme, the high up at around 186, down to the low at about 115. And those green lines are drawn automatically. Those are the retracement levels. And as can be seen in recent history, these levels were an important guide to show important resistance after the big rally in the early part of 2014, and also important levels of support beneath. Should that support be broken, as it was with the silver example, then there's a vulnerability to much deeper drops to the next level down. Here are the miners, precious metals miners, and here's another good example of a very Fibonacci-friendly chart. You can see plenty of levels of price turnarounds during certain lines, these areas of either support or resistance depending on the price relative to the position of the line. Here, for example, we see repeatedly what difficulty the instrument is having getting above that line, which now represents resistance. It used to be support. So this pattern as a whole is rather confined to that zone for the time being. Of course, this works with things besides just precious metals. Here, for example, is the social media ETF, drawn from one extreme to another. Therefore, the lines after that extreme can be very helpful for bulls or bears, depending on their positioning, to look for opportunities to get in or out at attractive prices. So here in this case, a big tumble was stopped short almost precisely at the 38% Fibonacci level, and the recovery from that was likewise stopped almost to the penny at the level above.